Very good.
Awesome. Well, welcome once again, everybody, to this is actually our 17th bi-weekly call together. So, we've been doing this for well over a year now. So, today we are going over Elliott Wave Principle Part 2. As always, we greatly appreciate your time and attention for coming out on a Saturday evening. We know you value your time, and we also value your time, so we're going to get right into this week's call. Austin, would you like to start us off?
Yeah, absolutely. So the topic is going to be Elliott Wave Principle. Elliott Wave Principle, or EWP, I call it EWP. Sorry, getting silly here. It's a forecasting and trend reading tool, essentially. It's the process of counting waves in a market, being able to identify where we are in a specific market movement, and where we may reasonably expect to go next, right? Elliott Wave Principle does provide a set of glasses, if you will, a different way to view the market, a different perspective to kind of identify and predict trends. And we're going to get into a lot of this stuff here shortly. It might be kind of overwhelming at first when we're explaining it to you, but as soon as you kind of see the examples and see how stuff works, you should be able to catch right on. But that's a very broad and rough explanation of Elliott Wave Principle.
Awesome. And just to continue with that, while we will be going over Elliott Wave Principle today, in order to fully utilize the Elliott Wave Principle, we must also be familiar with Fibonacci extensions and retracements. So this is something we did in part 1 as well, but we are going to go over both of those once more, just to quickly summarize them, and then we'll go a little bit more in depth on Elliott Wave theory today. So these tools are amazing to use on their own, but in conjunction with Elliott Wave Principle, Fibonacci tools themselves become even more powerful.
And I'm sure a lot of you guys have heard us talk about Fibonacci, the Fibonacci extensions and retracements, and specifically the Fibonacci sequence, which is the sequence that actually allows this stuff to work on the charts, right? So a little brief rundown of what the Fibonacci sequence is. The Fibonacci sequence is one of the most famous formulas in mathematics, right? I don't know if anybody in here is a mathematician, but if you are, you've probably heard about Fibonacci, especially the sequence that he made. So this formula was conceived by Leonardo of Pisa around the 11th century, so roughly, around the year 1200, give or take. We utilize Fibonacci tools for two major purposes, right? Fibonacci relations with Elliott Wave Principle, which we're going to be talking a lot about today, as well as finding high probability points of reversal, right? So anytime you know when the market's going to go on a pivot, right, you'll be able to catch the trend early and really take advantage of that. So these are very, very important for technical analysis.
Absolutely. And, I say this all the time, but the Fibonacci sequence was the thing that made me think that we are indeed in a simulation. So, we're going to quickly go over that. But
yeah, it's actually crazy.
It's insane. It's insane. But which Fibonacci tools do we use in particular? So for our Fibonacci retracements, which we will go over in TradingView for you guys to see, we also have our settings in the next couple of slides. We are looking for the 38.2, also referred to as the 0.382, the 50 level, which is the 50% level, and the 61.8% level, or the 61.8. For Fibonacci extensions, we're looking for the 127.2 level and also the 161.8.
Yeah, and I also want to mention, there's more levels than the ones that Logan just mentioned. Those are just the main ones that we're typically focused on. Oftentimes, there will be other levels like the 2.618 or the 2.272 that can come into play. So, we'll talk about that. But this is a great visual of the Fibonacci sequence being kind of showcased in our physical world, right? I hope everybody's seeing the picture that I'm talking about right now. But you can see the spot, right? The Fibonacci sequence does create, in a sense, a spiral. And you can see it everywhere, right? We can see it in the ram's horns up above, a seahorse, the way that the human body shaped, quite literally in our DNA, stuff with like old Roman architecture, the way that seashells are formed, pine cones, whirlpools, hurricanes, the way clouds form in the sky, right? And even our own Milky Way galaxy all have relations to these numbers. And I'm sure you've probably heard about this stuff in school without actually knowing. I'm sure a lot of you guys heard about something called the golden ratio in school when you were in high school math. And that golden ratio actually is the 0.618, right? And that's like kind of what we're looking at here, right? The same relation that, all these things kind of share in common with like these numbers. That's why Logan said it makes him think that we're in a simulation, because like how on earth are all of these things sharing a commonality like this, right? Which is this specific number in mathematics. All the way from the way that a pine cone or a seashell is formed to the way that the Milky Way galaxy is formed and our DNA. So it's like, It's really some wild stuff if you think about it on another level. And this is essentially why it's applicable into the markets, right? It's all affected by this. We are humans. It's in our DNA. The way that we act, the way that we interact with our physical world, our decision-making, our emotions, all kind of come back to this number. And, that's how the markets are affected by it. So I know, long explanation, but it's cool.
No, I think that was a perfect explanation. And, the Fibonacci sequence is in a way to create the perfect spiral. So it's interesting how, we see that overlaid in nature, but even more interesting how when you take those numbers and you separate them and you put them over a chart of anything, that they seem to find levels of reversal and supply and demand. So it's very, very interesting stuff.
Yeah, it's actually mind-blowing. I encourage you guys to do more research outside of here on it.
Definitely.
You'll be really fascinated by it.
Yeah, so, here's just a quick screenshot that I took from my trading view, because we know that when you first pull up your Fibonacci retracement tool, it's not going to look the same as ours. So, we are recording this. You'll be able to go back, but I highly recommend just setting up your Fibonacci retracement tool like this. And something very, very important is you have your fib levels based off of a log scale. In OBR, we're always recommending that you do your technical analysis and your charting on a logarithmic scale. So when you do that, you need to make sure your fibs are also aligned with that.
And at the end, if you guys have questions as to regard what's a logarithmic scale, we can definitely talk about that. Okay, so yeah, onward. Cool. So moving on to the actual topic of conversation, right? We talked briefly about what Elliott wave principle is. We went into what Fibonacci is, Fibonacci sequence, why that's applicable, and why that matters. We're going to see what they are in conjunction here momentarily, but we want to get into the juice of stuff, right? What is Elliott wave principle? Elliott wave principle was created by a man named Ralph Nelson Elliott. He cornered 13 patterns of movement, or as we refer to them as waves, that recur in market price data and are often repetitive in form, but not necessarily repetitive in time or amplitude, right? So the market is comprised explicitly of actionary and reactionary waves, or impulsive and corrective waves, right? And as we say here, you will hear us refer to these same waves as impulsive or corrective. From a definition standpoint, you will often hear people refer to these things as actionary and reactionary waves. They're impulsive and corrective waves are also proper too, right? No one call you incorrect for calling them that. But here at OBR, right, when I'm having like a regular conversation with Logan about something, you will hear us use the term impulsive and corrective, right? More than actionary and reactionary. So, Logan, I don't know if you have any comments on that.
No, definitely. And you're right. It is the technical definition. Both of them are. We just know that some people say actionary and reactionary. We happen to say impulsive and corrective. They are completely interchangeable, completely the same thing.
So those are the two main basis points you understand, right? In Elliott wave principle, there is impulse waves and corrective waves. Yeah. Okay? Clear. Moving on.
Very clear.
Yes, very good.
And also, I was just remembering something, that the pyramids themselves actually were said to be made off of the Fibonacci sequence. So that was something else that I thought was really interesting.
Yeah, that's just insane.
So you may be thinking to yourselves, this is all fantastic stuff, guys, but why do we really use the Elliott wave principle? And there is a very strict rule set which enables you with a higher probability to know what is the proper wave count versus what is not. So if we know exactly how to spot something based on rules and guidelines, we are then able to filter out noise which does not fit into those said guidelines. And in my opinion, Elliott wave principle provides human traders the #1 edge over computer-based algorithms, which is market context. So, yeah. The rules and guidelines are really what separates Elliott wave principle from other things, in my opinion, because it really enables you to see, okay, what is the correct count? What is the incorrect count? For example, if you ever hear Austin and I debating over what is the correct count, and, the only real way to settle that conversation. Yeah, the only real way to settle that conversation is to follow the rules and guidelines. And the amazing thing is that when you break everything down on a granular enough level, you can filter out everything, so you know when you are really looking at the most probable, or what I refer to as the primary count.
Right. Great. So moving into like the more, the stuff that you're going to actually apply to your charts and to your analysis is understanding what the impulsive and corrective waves kind of are and what they stand for. So starting off, we're going into the 5-wave impulse move. Okay, so the typical anatomy of an impulse move, or the actual anatomy of an impulse move objectively, is determined by 5 waves, right? The most basic and universal pattern within Elliott wave framework is the 5-wave impulse move. The three of the waves, which are labeled 1, 3, and 5, are our actionary waves, or or impulse waves. These are separated by two counter trend interruptions, which are corrective waves, as we just said, which are labeled 2 and 4. The 5-wave impulse is also called a motive or an impulse wave. So that's just another name, right? Actionary, impulsive, or the motive wave. So you're going to be confused. You're like, why are we talking about corrective waves in the 5-wave impulse wave? Well, this is all fractal, right? So when we go and show examples here in just a moment, I believe in a few slides, you'll see what we mean. In every impulse wave, there is corrective waves, and in a lot of corrective waves, there's actually impulsive waves. It's just all fractal. As you zoom in to smaller time frames, you will see all these things kind of take place. And examples will be provided here momentarily, but that's Definitely. What it is.
Yep, and that's why, again, the rules and guidelines come into it. We refer to those as subdivisions, where you break down enough subdivisions, and this is something you can find, we're going to touch on it on the slideshow, but also in our previous educational content. So now that we know about the first 5 waves, or the impulsive move, the motive move, let's go over the complete cycle. So each 5-wave impulse or motive move is followed by a 3-wave reactionary or corrective move. Just as waves 2 and 4 are corrective waves of wave 1 and 3 in the impulse move, and again, we're going to show you guys a visualization, so if it's not making sense, just bear with us for 1 second. We will see that there is a correction of that entire move, which is our ABC corrective wave. So each 5-wave impulse move is followed by a 3-wave corrective move. Very, very distilled. There's a 5-wave move followed by a 3-wave corrective move, which usually goes to the opposite direction of trend.
And I want to make it clear, right? The impulse moves are classified with numbers, right? 1, 2, 3, 4, 5, whereas corrective waves are classified or recognized with letters, A, B, C, exactly. Right? So 1, 2, 3, 4, 5, A, B, C, right? Impulse corrective. Yeah. Here we go. Finally, some visuals to look at. Yes. Wonderful. So this is what we were just talking about, right? This is a visual of a 5-wave impulse move. You can see if we took away the numbers, you would just be like, oh, that's like what a normal stock chart looks like, right? It goes up and then it comes down a little bit, but it makes a higher low and then continues higher, makes another higher low. It has a very bullish market structure, but that is what a 5-wave impulse move looks like. You can see that waves 2 and waves 4 are corrective, as they are ABC. They go down. They are counter trend. Against the waves 1, 3, and 5. 1, 3, and 5 are going to be more impulsive, so they're going to overtake the size of waves 2 and 4. Typically, in the anatomy of a 5-wave impulse move like this, you will see wave 3 being the most elongated, right? So wave 3 will often be the most bullish time, or the most, I'm going to keep on repeating myself, the most impulsive time of this 5-wave impulse move. Wave 5 can also share these properties, but typically, wave 3, that's what you're going to be seeing.
Yes.
So, Logan, do you have any comments? And, the anatomy of this is pretty clear, right? I mean, do you want to go over the rules? I don't know if...
we can definitely touch on the rules in a little bit. But, just because we have another graphic coming up right after this. But yeah, like Austin said, wave 3 is usually the most impulsive or elongated wave out of the 5. But like he said, wave 5 can sometimes take over that characteristic where it is the longest. And something to remember is that if wave 5 is the longest, that usually will yield a larger 3-wave corrective move, which we're going to show you right now. So here's back to the complete cycle, right? Is our first 5 waves higher, like Austin said, 1, 2, 3, 4, 5. That's our 5-wave move higher, followed by our 3-wave counter trend corrective move, which is our ABC waves. Austin,
pretty clear, right?
Pretty clear.
No, I just hope people are understanding I know we're saying a lot of words, but we really want you to absorb these visuals and kind of grasp what we're saying, right? 1, 2, 3, 4, 5, 5-wave impulse move. You can see the fractals of wave 2 and wave 4 in there, which have ABCs in them, and then we have our bigger ABC, after our impulse move. After 5 waves, you will see an ABC, right? After an impulse move, you will see a corrective wave, and it's very fractal. Right, so if we were to zoom in, hypothetically, if we were to zoom in on wave 1, we should see the same thing, essentially. Right, 1, 2, 3, 4, 5, and then ABC. Right, so wave 1 would be 1, 2, 3, 4, 5, and then wave 2 would be ABC.
Exactly.
And then wave 3, 1, 2, 3, 4, 5, wave 4, ABC.
This complete cycle takes part within every wave. So like Austin was saying, in wave 1, you will see this entire cycle play out, 1, 2, 3, 4, 5. Wave 2 is then this ABC correction move. This would be just if we're looking at a higher time frame, for example.
Right. Yes. Cool. Logan, is it me or you?
It's you.
Okay, cool. So potential trading opportunities, right? And there's a few ideal locations in the overriding wave patterns for high probability and high reward, risk to reward trades. So the end of wave 2, and so essentially what I'm saying by this is the area in which you should be trading in accordance with what we just talked about, right? The structure of an impulse move or a corrective wave. So the places that you're going to be looking for opportunities is the end of wave 2 to trade for wave 3. So after that ABC correction for wave 2, you're going to be taking advantage of that elongated wave 3 to the upside, as we just said. Or you could look at the end of wave 4 to trade wave 5. So as soon as you see wave 4 complete by your rules, you'll be looking for that wave 5 to the upside. You'll be taking advantage of that wave 5. After you know that the wave 5 is completed, you'll be trading the end of wave 5 to trade for wave A, right, which will be your first leg to the downside. You can do this with, you can also trade the end of wave B to trade for wave C, and the end of wave C to trade for the wave 1, right? So the visual follows, I think.
Yes.
Yes, here we go. Everything I just mentioned here is showed in the purple boxes, right? Potential trading opportunity. As I said, you could catch the end of wave 2 to capture the entire move of wave 3. You could catch the end of wave 4 to catch the entire move of wave 5. And then you're going to sell, obviously, for wave 5, play to the downside, look for that dead cat bounce for wave B, and then play down to C. You may be asking, why are you only playing the bottom of wave 2, or the pivot of wave 2 and wave 4, and then only A, B, or wave 5 and B? Well, you don't want a counter trend, right? You only want to go with the trend. So you're going to only be playing bullish positions in an impulse wave and bearish positions in a corrective wave, right? You can trade the top of wave 1 or wave 3, but the probability and risk reward of that trade typically isn't ideal. So
definitely,
I
would say sometimes it's even not the best move to trade wave 5 for wave A. I would probably trade wave 2 for wave 3, wave 4 for wave 5, and then just wave B to wave C.
Wave C, yeah. That's always a great trade. Wave B to, and that's typically people will call that a dead cat bounce. It's like things start falling. Get that big bounce that gets everybody kind of tricked. Oh, back to normal, and then it just hits you with a lower low, right? That's very often a corrective wave, believe it or not.
This was just like SPY last week.
Precisely. Exactly.
So now we're going to go over adding in the Fibonacci relations with our Elliott wave principle. Now that we have a basic understanding of the principle itself. So utilizing our Fibonacci, we can find likely areas of reversal for waves 2, 4, and C. So to find the end of wave 2, we're going to look at the 38.2 to the 61.8 of wave 1. To find the end of wave 4, we're going to look again for the 0.382 or the 38.2 to the 61.8 of wave 3. So essentially just the last impulse wave we had, right? And to find the end of wave C, we're going to look for the 1.272 to the 1.618 of wave A. And we have a lot of examples coming up to highlight this for you guys.
Yes, we do. Yes, and then same thing here, only with the impulse waves, right? We can find likely areas of reversal for waves 3 and 5 to end in these areas. The end of wave 3, or the 1.272 and the 1.618 extension of wave 1, or the end of wave 5, which is the 1.272 or 1.618 extension of wave 3. Beautiful. Examples here momentarily. Perfect.
Yep. So here's an Apple chart on the daily, and as you can see, here's our 5-wave impulse move from our COVID low on the left side of the screen. We had wave 1 form, and what I was looking for was a wave 5 take profit zone. If you take the Fibonacci extension from the entire wave 3, you'll see the 1.272 is at 179.40. And as you can see on Apple for our wave 5 completion, that is where we topped off. We had a little bit of a double top here before we then came lower. And if you move this chart over, you'd see that we are still coming lower as the market trends lower this last week.
And, we will be showing you guys after this, or we could briefly touch on it now, and Logan, it doesn't matter to me, about how to apply these extensions and retracements.
Definitely.
And, how to apply Elliott wave onto trading view charts and stuff like that. We can talk about that at the end, I suppose.
Yeah, absolutely. We'll do that right after the slideshow.
Cool. Here's another one. This personally isn't my favorite chart. Not for the wave count. The wave count's fine. The Fibonacci extensions are fine. Everything about it is fine. But this is I believe a monthly or a 2-month?
A Bitcoin 1 month.
Yes, this is a Bitcoin 1 month chart. So this is showing data really dating back to inception of Bitcoin. Some of the data gets cut off in the beginning there. But essentially, the entire lifespan of Bitcoin thus far has been representative of a 5-wave impulse move. And you can actually see how the third wave right there back in what people classify as the 2017 bull run, that is like one of the most impulsive waves. And we could say that wave 1 was also very impulsive, but yeah, very much has the characteristics of a 5-wave impulse move. And actually, we recently just saw what seems to be a local top at our 1.272 extension here from the top of wave 3 to the bottom of our wave 2. And you can see the dashed line that Logan has right there, which kind of shows where he's drawing the points from. Now, I just want to mention quickly, this does not mean that Bitcoin is not going to head higher. I was actually debating with Logan before we hopped in here about this wave count, and just wave counts in general, about how we view them. And I want to make it clear that just because something does hit a target of a 1.272 or a 1.618, and you see the waves clearly in there, doesn't mean that it cannot continue. Right. The stuff is don't think about this stuff as like set in stone. You can always see stuff kind of exceed or not reach your expectations for wave counts and extensions and retracements.
Yeah. That's very important to note, because while this may be a count, remember guys, we always have to know that it may not be the primary count. So we need to make sure we're looking at the primary count. Like Austin said, although we did find some resistance here at the 1.272, this could very easily head higher and potentially move all the way up to the 1.618 and then come lower. As of now, right, all we can say is that we found resistance at the 1.272. Right. So right now, we can see that is potentially the high of wave 5. If we make a new high above that, then we will expect price to go to the 1.618.
Right. And regardless, right, if this is the top or not, like Logan said, we found resistance at this level. You could have drawn this extension. I mean, you could have technically gotten this level back in 2017, right, Logan? Right. As soon as we made our top for wave 3, this data was available to you. Yep. Right. So technically, you could have said, okay, we're at this level in 2017. I believe Bitcoin went to like $19,500, $20,000. You draw the retracement back down to the low of wave 2. You could have said, with reasonable confidence, yeah, Bitcoin will probably see at some point in this impulse wave, the area of, 65,000, right? And that would have been all based off of Fibonacci extensions combined with your Elliott wave principle. Yes. And like, we've used this method to snipe so many tops. I wish Clayton was in here. He'd be able to tell you about Tesla. Tesla was a great one. I don't even know. No, we don't have examples of that right now, but perhaps we can go over it after. So yeah, it's just an amazing tool. And you can see, it respected that 1.272 very well. So we'll see what happens with Bitcoin, but that's another conversation.
And something else to add on to the screenshot, I do draw my fibs inversely here, which we will go over when we show you guys how to draw them on TradingView. But as you can see, wave 4 did come down to the 38.2. So I know it says 61.8. That's because it's drawn inversely to find the extensions up here. But if you draw your fibs normally, how you should, this will actually say 38.2. 61.8 would be here. Same levels, literally the same levels. They would just be mismatched. But we did come down to the 0.382 before we then head higher to that 1.272 level. And something else to note is that while, in trading, we have to remember nothing is lines in the sand. EMAs are not lined in the sand. Nothing really is. Pivot points are not. So everything is a zone. Regardless, I know we did not exactly touch the 0.382, but we got very close. I would definitely consider that respecting the 0.382 level.
Definitely. Logan, go ahead.
Yeah, so here we have a 5-wave move to the downside on QQQ. And as you can see, same thing. We saw wave 4 come back up into our retracement zone. It came right in between the 38.2 and the 61.8, around the 50 level, and then head lower. And we did bounce right off the 1.272 for this wave 5 low. And, this was, if you zoom out, wave A of a larger zigzag correction.
Q's getting ripped pretty hard there. Moving on, another example, we got AMD Advanced Micro, is it devices? Yes, Advanced Micro Devices Incorporated. You can see here a very clear ABC corrective wave, and when you do the extension from wave A to wave 0, wave A, we can see here we get an extension down at the 1.272, where we seem to have found a pivot for potentially another impulse wave to the upside. Now, this doesn't have to be the bottom for wave C, but we can definitely see that the market is respecting this level, right? Fibonacci extensions here provided as a leading indicator for the market. So as price headed towards that 1.272 extension, we could reasonably assume with some level of confidence that we could see a reversal in this area, and sure enough, you did.
Yeah. And just to quickly go back to remember everything. For this extension, for the 1.272 on Bitcoin, we're taking the entire wave 3, the 1.272 from wave 3. For QQQ, we're taking the 1.272 again for wave 3 to find the low for wave 5. Same situation, but inverse to the downside. And like Austin said, we took the entire move from wave A here to find the 1.272 potential area of reversal for wave C. And here is the last example for right now. We have another zigzag correction here. And as you can see, we took, again, the high to low of wave A to get the 1.272, sorry, the 1.618 rather, actually, on Tesla. And as you can see, we did actually open up right beneath that, but came right back up and are still respecting this level as support. So in this case, we bounced off both the 1.272. As you can see, we found some support here. We then came up to this area, formed wave 4 for our 5-wave move to the downside here in wave C. Again, this is more of the fractals we were talking about earlier. You can see a 5-wave move in wave C. And then after that bounce up from the 1.272, we came down to the 1.618 and seemed to have found a low, at least for right now. Definitely have a very strong recovery since then.
Cool. And here, this is just a more talking about the anatomy of kind of how these waves form. I know we mentioned impulse waves, right? 1, 2, 3, 4, 5. Corrective waves, A, B, C. Well, there's actually complex corrections, right? And these complex corrections have different names, and they typically fall into these three categories. Which first one being a zigzag, and there's more, guys. It's just I believe there's more, right? Is there more complex corrections in this?
No.
Yes. Yes. No.
No.
No, there's not. These are the three main ones. Yeah, so there'll be like a zigzag, but there'll also be like stuff like double zigzags. We don't.
That's what comes after.
Typically, right. Okay, good. So a zigzag is a 5-3-5. This includes 3 types, which is single, double, and triple. So the zigzag, you can think of a 5-3-5, right? A 5 meaning an impulse wave, then a 3 corrective wave, and then another 5 being a impulse wave, right? 5-3-5. Flat, you can see a 3-3-5, which is a corrective wave, another corrective wave followed by a impulse wave. Right, sounds kind of confusing, but you guys kind of get the idea. And then we can see triangles, which could be a 3-3-3-3-3 pattern, right? And that could be complex, just repetitive ABCs, or ABCs in some kind of consolidation can also often be seen in this type of pattern, right? And forming a triangle.
Yes.
Logan, I don't know if you want to talk about this.
Yeah, I mean, we're going to show some examples, which I think will paint the picture a little bit clearer for you guys.
Right.
But to get the main idea. We most of the time are going to see zigzag or flat corrections. We will show you an example of a triangle. They do happen, but they are not as common as a zigzag and a flat. And the only difference between the zigzag and a flat, besides the subdivisions, and remember the 5-3-5 is the subdivision. Like Austin said, there is a 5-wave move in wave A, a 3-wave move in wave B, followed by a 5-wave move in wave C. And if that's confusing, I promise we're going to go over it. But regardless of the subdivisions, the only main differentiating factor between a zigzag and a flat is if wave C makes a low beneath the extreme of wave A, or if it stays at the same level. So as you can guess, a flat would be where wave C ends at the exact same level that wave A ended, or around the same level. And a zigzag is when wave C goes beyond the low of wave A. So like I said earlier, this brings in the subdivisions, which are an integral part of Elliott wave principle, and we will quickly touch on it here, but we highly recommend asking us in the live calls for a more detailed explanation if you need one. We also
go to our website.
Exactly, yep.
Or YouTube.
We have it on the EDU content.
And guys, those seem a little confusing, but we will be providing examples here. Shortly,
yeah. So here is the first example that we're going to look at, a zigzag. And this is a current SPY chart. I am not suggesting that wave C has ended yet, but it paints the picture that we are in a zigzag. Why are we in a zigzag? Austin and I don't exactly see the same way about this, but I see a 5-wave move in wave A here, a 3-wave move in wave B, right, A, B, C, and then a 5-wave move in wave C. And also a move below the extreme of wave A. That, to me, shows me that we are in a zigzag. And Austin and I were looking into the Elliott Wave Principle Bible, the textbook by Robert Precher and A.J. Frost, and this is actually a complex correction known as a double zigzag, which is what we just went over in the last slide, right? There's a couple of different kinds of zigzags, single, double, and triple. Right now we are in a double zigzag on SPY.
Seemingly.
Seemingly.
So we got another chart here. I believe it's Chevron.
This is Chevron, yeah.
Yes, Chevron, and this is an ABCDE. This is a very classic triangle pattern in Elliott wave. And this is again a different way of looking at it. This is the 3-3-3, the multi-3 pattern that we were talking about, a triangle or a consolidation. And you can see that these typically act as continuation patterns. They can sometimes act as reversals. But in this case right here for Chevron, it is acting as a continuation. So you can see it entered into its triangle pattern. After it had its last touch for its wave E, we then took off to the upside a reasonable amount and continued.
Yes. And again, it's 3-3-3-3-3. ABC,
Yeah.
ABC, 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 right? So lots of ABCs. And here's an example of a flat correction on Chevron again, just because I thought this was pretty easy to see. We have wave A, we have wave B, and as you can see, we do not have wave C that makes a low beneath the extreme of wave A, so this would be a flat. So I know it says thanks for joining, but we are not done yet. We will be going over to TradingView, right, Austin? To show you guys how to draw some fibs.
Yep.
Would you like to do that, or would you like me to do that?
Sure, I can share my screen. Yep.
Awesome.
Let me just make sure we got everything here. Cool. Okay, guys, so just go ahead and switch on over to my screen here. Logan, just give me the A-OK, and we got everything. We'll actually go over to
A-OK.
Cool. So guys, what I'm going to be doing now is I'm just going to be showing you how to apply these things onto your charts, right? Both in the proper way and like actually just like how to find them on TradingView. If you are on a different platform, I'm sure there's a way to go ahead and access Elliott wave, letters and Fibonacci extensions and retracements. But if you are doing it, I would say if you're doing intense technical analysis to some level, I highly recommend TradingView. TradingView is absolutely elite. It's what I've been using for, at this point, many years, trading and analyzing the markets with, and I can't really think of a much better software. Not to talk up TradingView too much, but there's other good stuff like TrendSpider. TrendSpider is really good as well. I'm not too sure if they have a lot of support for Elliott wave framework, but I know they sure as hell have Fibonacci extensions and retracements. So anyways, guys, you're on TradingView. What you're going to see over to the side is your toolbar. Again, if you want to know more information on how TradingView works, we do have videos on this on our YouTube, so go check those out. But you're going to come over here and you will see a ABC, or I believe it might start you off as an X as this. You're going to see this pattern right here. You're going to open this up and you're going to see all this stuff, and you're actually going to see Elliott wave stuff right here. Right? These allow you to count the waves. So if I wanted to go count an impulse wave for Bitcoin, let's say, I would say click on the Elliott wave impulse wave 1, 2, 3, 4, 5. Click that where you can star it to make it your favorite, and then I can start applying to my chart. Right? I click my wave 0. This would be wave 1. Wave 2, right? We have an A, B, C, wave 2. Wave 3, very impulsive, so our wave 3 would be up here. And then debatably, right, depending on how you look at it, this would be wave 4 and then wave 5. Right, so you can apply them just like that. If you wanted to go change stuff up, make it look very nice, right, you put them right up against near where you're talking about, the points, you go up to your gearbox, and then you can choose their degree. Now, if you get really in-depth and intense and, you're really pushing your technical analysis to another level, you will want to make sure that your degrees are proper. So whether they be minuscule, sub-micro, micro, minute, minor, intermediate, right, whatever, super cycle, super millennium, right, depending on how you do it, they will, like, show different sizes, different ways of displaying it, and that's just because this stuff is fractal, so you need to be able to differentiate between other moves. So for example, right, I'll keep this let's say micro, right, but if I wanted to count the moves, the impulse within wave 1, right, I'd go back over to my ABC, or sorry, my impulse wave, right, and I'd count 1, 2, 3, 4, 5, right, and I'd put this up here and I would make this minuscule, let's say, put our wave 1 right here, wave 2, wave 3, wave 4, wave 5, wave 1, right? So within wave 1, there is 5 waves by itself, and then here, clearly, right, our COVID capitulation, within our wave 2 corrective wave, there's a very clear ABC, right? And this could be minuscule if you'd like. Go ahead and bring those up here, wave 2. And then you keep on doing the same thing for wave 3, right? You could find 5 waves within wave 3. We can find them really quickly here. Don't want to spend wave 1, wave 2, wave 3, wave 4, wave 5. And you see wave 5 actually has an ending diagonal there, which is quite interesting. That's a technical pattern. And then, guys, this is all fractal. Within wave 2, this wave 3, I could find 5 waves. So if I wanted to go ahead and do this, right? If I wanted to make this sub-micro, and I wanted to find this. Right? We could go wave 1, wave 2, wave 3, wave 4, wave 5. Make this minuscule. Right, so this is very much fractal, and you could zoom into smaller time frames to really count these waves properly.
Austin just has a trained eye, so he can do it rather quickly, but if you zoom in, that is actually the correct wave count.
Yeah, so, you'll be counting the waves, right? And then, so on and so forth. So that's how you're going to be doing Elliott wave principle on TradingView. And then if you wanted to apply Fibonacci extensions on top of that, you will go right over here. Oops, my apologies, over here to this, you'll see this line pattern, I guess. This is what Fib extensions and retracements look like, but just looks like a little line pattern there. You'll click Fibonacci retracement, click on that, and let's say I wanted to find, an extension level. What I'm going to start doing with extension levels is I'm just going to start considering the highs, right, or the stuff that we mentioned in the slideshow, right, and essentially what that means is considerable highs and considerable lows, which will result in being waves 1, 2, right, and your main points for corrective and impulse waves, right? So Austin, going here, right?
Could you quickly highlight that you and I actually draw Fib extensions a little bit different?
Yeah, so you're going to have to touch on that. I'm not too...
Yeah, so I was showing it being drawn from perhaps wave 1 to find wave 3. You like to also draw them from waves 1 to 2. So you'll take a reactionary move.
Absolutely.
And you'll draw the Fib extensions from a reactionary move as well.
Absolutely, absolutely. And you're going to get different results, depending on how you draw it. But in this case, right, the 2.272 would be the one of that would be the one that's the hot number for this one if you're doing an extension from wave 1 to wave 2. But yeah, Logan's right. Logan does it different ways. Also, if you were to take, the 2017 peak, right, the one that we looked at in the slideshow example, you did an extension from the top to the bottom, right, and we go ahead and apply our 1.618, the golden ratio number, boom, right at the top for Bitcoin. So you could have reasonably said, right, if I were to go, this is kind of crazy, I always say this to people, if we go back in time, right, and let's get rid of all these waves. If you were to go back in time, right, and go back to late 2018, you would have in fact had enough data to determine a price target such as this, right? Because all you would have done is considered this high and presumably this low. You would have done an extension, and you would have found that your 1.618 is at $62,000. So you could have said with some confidence to some level, I think Bitcoin could reach $62,000 if we see another impulse move to the upside, and that's exactly what happened. So these things are very remarkable. This is part of the reason why me and Logan think that we could live in a simulation. But yeah, there's a multitude of different ways to draw them. I know Logan said that he draws them a little bit differently than me, and that just means that he's applying different highs and lows, right? So don't let that confuse you. Go and experiment by yourself. You'll see what kind of levels line up and which don't. There's many references online to go see how these levels interact with each other. This is only like a 1 hour thing that we're doing in here. Elliott wave in conjunction with Fibonacci extensions take, years to learn, right? So this is just very broadly, very briefly brushing the surface, scratching the surface of what this world is. So, I definitely encourage you to do more research outside of this if you really want to get good at it,
For sure. And we also have another, bi-weekly live call where we did go over some different stuff as well. And, something I wanted to touch about on this chart that you have right now, you just found the 1.618 from, that would be on the last chart we were looking at, wave 3 to wave 4.
Yes,
precisely. But if you also utilize something that Austin and I talk about quite a bit, which is Fibonacci clustering, that is the concept of taking multiple Fibonacci levels. You could have taken this level that Austin has, the 1.618, that lines up around 65,000, and you could have taken the Fibonacci extension from wave 3 that I had drawn, that came up to about 70,000, and you could have gotten the exact middle of where we did actually find a top. So, Austin, if you want to move back to the left, it's from that 2018 high to the low beneath that. To the left.
That's what I have drawn.
No, to the left. The prior.
You're looking much more macro. My apologies. Yes. Oh, I have to go to my BLX chart. Do that. Oops. Delete. Yes. Boom.
Yeah. So there's that 1.272 level, and it lines up. If you combine and cluster the two levels we were talking about, you would have gotten the exact high on Bitcoin.
And guys, do you understand how I'm drawing this? Hold on, let me go to my settings and apply the trend line, right? So let's redraw that. So I'm taking my Fibonacci, and guys, when you draw them, you're gonna have all these, like when you initially start, right? We'll do it how you guys would see it. All these boxes are gonna be checked off for you, right?
It's also going to
Just
be
check them
rainbow,
all off.
so
Right, it's also going to be a rainbow. So staying like that, right, you're going to go ahead and you're going to, right, if you wanted to apply it like Logan, you're going to take this point, which is presumably the wave 3, right, and draw it down to this point, which is our wave 2, our bottom of our wave 2, right? And then you'll just take your Fibonacci tool, and you see how I have a X and Y axis for my pointer right here? You're going to line it up, my horizontal, my X axis, right here, click, and then I'm going to drag, whoops, sorry, you're going to drag down to where my X-axis is lined up with the bottom of my wave 2. Do you see how I have it lined up with the bottom of wave 2 right there?
Could you drag
Boom,
your cursor just to price so people could actually see? Because people might be confused by that. Yeah. So he's drawing it to the high and the low, but just the way that he's drawing it is across his screen, so it's a little bit easier to see. It's actually easier to look at the white lines rather than his cursor.
Yes.
Yeah.
And then, we can go ahead and isolate, get rid of all of these. You can go ahead and isolate the 1.618 and, the 1.272. You'll see it right there. And then I believe you can extend these to the right. Oh, yes. Boom. There it is. Right. So, yeah, that's how you apply those guys. That's Fibonacci, and then Elliott wave obviously is the different, letters and numbers over here, right? So if you wanted to start counting waves, you could do this 1, 2, right? However, you'd have to zoom in to find which ones are actually true. But yeah, that's how you do that. And you want to use this all in conjunction. Guys, it takes a lot of practice to get used to, but this can really change the way that you trade. A great example, I'm just going to go to it real quickly, is Tesla. We actually sniped the top of Tesla with its recent move when it ran to all-time highs to 1250, and we were actually able in this Discord to get a lot of people to offload Tesla shares right at the top, right? It was actually pretty amazing. So if we take this high with this low and this low, right, the two considered lows, and you do an extension to the upside, you'll actually see our 1.618 lines up beautifully. Absolutely beautifully. Let's get rid of this. With our high. Right, so as soon as Tesla went up and ran very hard to this 1250 level, we immediately alerted this Discord and said you should probably be aware if you're in Tesla. And it actually was to the day, to almost within a few dollars the top. Yes. So quite remarkable how this stuff works. It's actually incredible.
It is.
There's not any tool. There's no other leading indicator in the world that will tell you these things. So.
Absolutely. That's why it is, in my opinion, and I always say this, that Elliott wave theory combined with Fibonacci tools is the best forecasting tools in existence.
And yes, and guys, Logan, I don't know if you want to comment on this really quickly. I know TradingView does have an Elliott wave indicator.
I was just about to bring that up. Yeah.
Cool.
Elliott wave. So there is an Elliott wave indicator on TradingView. Austin, if you want to quickly pull it up for the people, it does help you guys. We've noticed a lot of people in here are starting to use it just because we talk about it quite a bit. If you are newer to Elliott wave and you do not want to count your own waves, you can look in the built-in scripts of TradingView for a indicator that tells you kind of which waves may be where. So it definitely does help to a certain extent. I can say though that it's not 100% accurate, but it does provide a very nice framework and is very, very useful for newer Elliottians.
Yeah, the only I think it's great that they're attempting to do something like this. I know it's still in the beta, and I know it takes away kind of that manual work, right, for you just to apply this indicator. But this learning it yourself and knowing how to apply it and actually having a good understanding of it, I think will get you much further in the long run and will really grow your knowledge as a trader. This right here, I would consider, borderline. I would consider this is correct, I suppose, but I don't know. I don't like it.
There's a couple of things that I would have raised a question mark about in this count that I'm seeing.
Right. So doing your own wave counts, I think, is going to be very beneficial, for sure. See, this is 100% wrong in my opinion. The way that it has this.
Yeah, I mean that makes no sense. That makes zero sense.
That's just completely wrong. So again, if you are doing this, make sure that give it a try doing it your own way before heading straight to
give it a grain of salt.
Indicators. Yeah.
Cool. Well, awesome. That was a great example of how to draw everything.
Yeah, that was really good. If anybody has any questions, again, guys, if you want to, you can make them, press the star button to put it as your favorites. I personally don't. I just use everything here to my advantage, so it's all in my favorites bar, essentially. But yeah, your favorites bar will be right here. I think I do have Fibonacci, so, if you just wanted your retracement tool to be quick right there on this little thing that you can drag around, have it under your favorites, boom, then you got your Fib levels, right? Oh, and I believe I can... Yes, that's what it's going to look like when you first apply it.
And ASTORE.
See how ugly that is? Right, and then you're going to have to scroll down, and then you have to press Fib levels based on log scale. Boom, yeah. You want to apply that immediately. So please do that. And guys, if you're not doing TA on a log scale, you should get on a log scale, okay? This is a linear scale. If you don't know the difference between a log and a linear, is your y-axis, right? The way that price is determined and shown in relation with previous price. So I guess a linear scale would be the usual way people would look at stuff, right? Just go up incrementally, 1, 2, 3, 4, 5, 6, 7, right? You just count up. But a log scale will make it price much more easier to understand, and price on your y-axis goes up exponentially. And it'll show price in a much more visible manner that's much easier to perform analysis on. So if you're on linear, I suggest getting off of that. There's no use being on it. I mean, can you really do TA on Bitcoin back here on a linear? I think it looks kind of ridiculous. I mean, I guess you can if you zoom in like a crap ton.
Still looks pretty silly.
Looks pretty silly. Yeah. You guys can actually see how impulsive Bitcoin's third wave it was, though, if we look at a linear. Like, you can actually comprehend it. Doesn't that look ridiculous? Bitcoin's third wave on a on a linear scale looks ridiculous. But yeah, so get on log. Get on log.
Get on log. All right, guys. So now is the time for questions.
Yes, absolutely. So if you have questions, you can go ahead and use your mics, or you can. Birdie Sky says, could you talk about how you said that you use reverse fibs?
Yes. Austin, do you want to do that just because you're on your screen?
To be honest with you, I'll probably mess it up because I'm not
sure
what
draw
you mean by reverse fibs either.
Draw the fibs how you normally would look for an extension.
Okay. Oh, now I have this crap. Oh, no. Sorry. Let me just go.
It's okay, but basically, right. Birdie, when I'm looking for an extension, I'm drawing them instead from the low to the high, I'm drawing it from the high to the low of a wave. So the normal way to draw fibs is actually from the low to a high, which will show you the proper sequence, which will be first 38.2 closest to price, and then 61.8 on the extreme. But when I'm drawing for extensions, I'm drawing it inversely with, so yeah, exactly how Austin just did it.
Right. Right, so this would be drawing them reverse from low to high. And you see how I have to check off reverse for it to be like that. Otherwise, it'll, right, you can see it here. It'll flip completely reverse. Right.
Well, I hope that makes sense, Birdie. When you draw them yourself, you're going to see exactly what I'm saying. As long as you have the extensions pulled up, you'll see exactly what I'm saying. Can this be applied to short-term charting?
Yes.
Absolutely.
Any time frame. Any time frame.
Yeah. That's the great part about subdivisions.
Prime, you are unmuted, my friend. Oh, yes, Alex, you got that. Thank you. Yes, you can use this on any times. I mean, we're displaying times here over multiple years. We've also can display times that happen, in a few minutes, so.
Yeah, the one thing I would say to that is there's obviously going to be a lot more data points when you're on lower time frames. So it may be a little bit harder to find the exact levels to take from, but if it's a clear price structure, you're still going to be able to use it, absolutely. I'm guessing there has to be some more questions.
What's that?
I said I'm guessing there has to be some more questions. We covered so much.
Yeah, I mean, it's probably a lot, for people, but...
Almost too much to get in here, like you're saying, just too much. Can there be multiple Elliott waves in the same day?
Of course, yeah. I mean, it depends on what time frame you're looking at, right? I mean, if you're looking at a fractal that's small enough on the 1 second chart, you're going to see many impulse waves and corrective waves throughout the day. But that could all be taking place within a larger impulse wave. Does that make sense?
Oh yeah.
Right? No. I mean, well, if it doesn't, I'll go back and like, hold on. I could actually probably show you. Like, I was just doing it on Bitcoin.
Yeah.
Here, I'll just do this. Right. I'm going to show you a fractal. Okay. I'm gonna do a wave count right back on it. Right. So we had our 1, 2, 3, 4, 5, presumably. Right. Yes, this wave count is taking many years to play out. Right. But this is the macro one. If we want to zoom in, there was actually an impulse wave that took place in a much smaller time frame in wave 1. Right, 1, 2, 3, 4, 5. And this would have a much smaller degree to it, right? So it would be submicro.
And you could keep on dropping down time frames.
And then I'm going to go, right? I'm going to zoom in even more.
All the way on to a 1 minute. You can find the exact wave count. So yeah.
And I'm going to go 1, 2, 3, 4, 5, right? And this is the 5-wave move within wave 3. Right? We can make this minuscule.
So when you guys are day trading, are you guys doing this 1 minute chart, a 5 minute chart, a 15-minute chart?
When we're day trading, I wouldn't say that this is like a huge counting waves is a part of our day trading. But it's not going to be what you think it is. Like it's more or less to find market context. What wave are we in? Are we in a corrective wave? Are we in an impulse wave? Right. So it's nice to know where you are. That's what it provides, market context. Right. Knowing what you are in within the market.
Right.
And then the Fibonacci extensions and retracements will help you find those pivot points and where you think things could possibly turn around.
Yeah. A great example is SPY this last week and why we were always looking short. Of course, we knew sellers were definitely in control of the market, but also we knew that we were most likely in a zigzag corrective move and wave C was going to come lower. So by having that higher time frame market context that we were most likely coming lower, then you know going into the day, okay, we're going to be looking for shorts today. But I do look for them on a 15-minute chart. A great example of last week was DWAC, was a trade that I took off of a 15-minute LE wave count. Like we said, you can go down to a 1 minute. We don't usually do that. The lowest time frame I'll usually go to is a 5 minute.
5, yeah, 5, yeah. Like here, right within SPY, me and Logan, I believe we agree on this that this was an impulse wave to the downside. Correct?
Yes.
You agree with me on that?
Yeah.
Yes. So we're looking at a 15-minute chart, right? And this is price action from March 29th to present, right? So a good amount of data, and within here we can pretty clearly see five waves, right? Should be right here. Go ahead and make these micro, right? And you notice that our third wave is the most impulsive. Though it's not the longest, it had the most impulse to it, right? It was like straight down, parabolic to the downside, right? And you can see here, right? This was actually, I believe we took advantage of this exact wave count in trades, right? This is actually how I found the bottom, Logan, right? I mean, I bought 420 calls when we were at 406 right down here, right? And that's largely because I believe if we do an extension to the downside here, look at that, right? So when you do an extension to the downside or 1.618, look where it is, boom. I hate these colors now. Oh, this is making me angry. Get out of here. Right? And then we reversed. So now, to be honest with you, could we see upside? Yeah, we could see a green week in the S&P 500 next week, right? Because this also kind of looks like,
an ABC.
Perhaps an ABC, right?
That's what I have.
B, C.
Yeah. I don't know if wave C is going to move like that, but yeah, same idea.
Right. General idea. So then you'd have this. Right? Does this make sense, guys? Right. So after what we said the whole time, right? After an impulse move, it'll typically be followed by, or always be followed by, a corrective move. Right. And we actually did. If you look at market structure, we recently made a higher low here, so it definitely suggests that a wave C will likely come up and surpass the highs of wave A, and that will in hand fill this gap as well at 427. So a reasonable target. I mean, how do you feel about that, Logan?
I would try to pull up the 127 too.
Oops.
Yeah, I mean, 436 is definitely... I mean, even 445 is on the table, but 436 especially is definitely on the table.
Absolutely. And if we were to do a retracement of this entire thing,
it could also be a flat. You know, we could just return up to the 427 level, gap fill, and then come lower if it's a flat. It doesn't have to be a zigzag.
Yeah, look how amazing this is. Why is it? I hate the fill.
It looks like it could be a flat because of the subdivisions. I'm seeing potentially 3-3.
Look at this. So this is a retracement of this entire impulse wave right here, right? We actually find, right, and this would be Fibonacci clustering, guys. Right, let's actually get rid of these trend lines because they're definitely confusing.
Top. Top. Yeah, there you go.
Let's get rid of this. Oops. Get rid of this. Right, and we actually see a level. Let's extend this out a little bit. Look at that. And we can actually get rid of this 1.618. We can get rid of this 0.618. We get a very clear cluster within this box, which I think would have a high likelihood of possibly being touched for our wave C here in the future.
Unless we die Monday.
Yeah. Unless we die, then things could be looked at a bit differently. We could find an alternative wave count to this, which, you know, could be the idea of that this impulse move is not over yet. That's always a possibility. But as of right now, this looks like a fairly reliable count.
I would say this is the primary count for now.
This is the primary count. And how do you like that level, 436 to 439? I like it. It also lines up very beautifully with this level right here.
Yeah, if we do have a zigzag, that is definitely what I'll be looking for.
Right, yes, and guys, this is the zigzag. Great time to show the zigzag. So let's go up here to a 30-minute chart so we can fit in some more price data. Right now, this ABC would cater to a zigzag, right? Because we're correcting in the opposite direction of this initial impulse wave to the downside, right? Simply drawn by a path. We can say we corrected to the we were impulsing to the downside, correcting to the upside, and then what is the zigzag? The 5-3-5, right? We had a 5, a 3, and then another 5, right? So we could see potentially another 5-wave move to the downside after touching this 436 to 439 level, right?
Yes.
And that could be determined. We could find the extension to that by, you know, taking this wave 5 high. In Logan, you know, you could do it down to the top of wave C or up to, you know, the top here. But for right now, I'm going to do the middle of this wave C.
Yeah, could you also do the top of that wave when you're done?
I will, yes. We're going to do the 1.272, the 1.618. Do that. Wow, that's actually nice.
Lines up with some prior price targets.
Yeah, and then we will take the same level.
I like that area. That area of 390 to 385, that's the area that I'm already looking at. And it's actually funny that you pull up 373. That's another level I was referencing this week. I think on the very extended side, 373 is definitely possible.
This is the exact level I have. I have some pretty in-depth analysis on my watch list. This is the exact box I have drawn. So, you know, in what does this kind of bring us down to on SPY? I know this just turned into like a TA on SPY in the S&P 500. But this also lines up with this gap that we made, you know, kind of around that 400 level, right? So coming down to these levels sub 400, I think is very reasonable to expect, you know, in the summer.
Yeah,
and you see how we're kind of predicting and trying to kind of sense where things could go based on waves and Fibonacci in conjunction, right? I think this is quite beautiful. So it wouldn't surprise me if this played out, you know, relatively close to how you're seeing it right now. So if anybody has questions.
Yeah, so I know I just answered this in chat, but Don Pablo said, do you guys do Elliott wave charting on Thinkorswim or just on TradingView? You can do it on both, or you can do it on a piece of paper, or you could do it on TrendSpider. You can do it wherever you want. As long as you can find a chart, regardless of how that chart is drawn, you could find and do Elliott wave analysis.
Absolutely.
And Clayton asked what about to the upside, but there is no wave count right now that says we are most likely heading to the upside. So
no, there's no viable wave count right now that could say that. The only viable wave count could be, you know, if we go, let's get rid of everything. So you guys see that wave count there, it makes sense. I could maybe make a case for one, but it's not the primary or even close to being the primary.
Definitely not likely at all, but there's technically one of them, yeah.
Right, and that is if this, you know, if we already kind of saw, if this was an ABC, I guess, maybe, right? Or that was, we saw 335, and this was the conclusion of it, right? A, B, C, and then 1, 2, 3, 4, 5. Right.
Yeah.
And then this inherently,
yeah.
This is a 5-3. This is a 3-3-5, guys, right? Which is one of the subdivisions or patterns that we talked about that you will see. And this inherently will make, you know, a larger A, B, C, right? All in a giant. We can give it the biggest one, macro ABC. And you know, this could be the conclusion where we come up higher. But I would consider that pretty unlikely right now. I think that we are closer to a bottom than we are farther away from a top. Well, I guess that doesn't make sense, right? Closer to the bottom, closer to a bottom than we are closer to a top, obviously. What I'm pretty much saying is that the bottom is near, essentially. We have one more move to the upside, and then one more move to the downside, and then from there, man, there's a very high probability that we go for all-time highs. Yeah. So I just think that the bleeding is just going to be a little bit longer, may put us out into summer, maybe even fall time 2022. But come 2023, I have a hard time being super bearish unless guys, right, we go up to higher time frames like a 3-day and we start speculating for some really deadly stuff, right? As we said, that stuff is fractal. We could see something play out where we're like, you know, A, B, C, right? And this is the smaller A, B, C within the first wave A, right? But there's no way of knowing if this is like a thing at all.
No way of knowing yet.
Right now.
We'll have to see.
There's no way of knowing, but it's possible, right? So this could we could really go down, right? Or maybe wave A goes down much further, and we see wave B come back up to be our dead cat bounce, and wave C is down at the market crashes, right? It's possible that we just see a very large correction. So there's many wave counts, but the primary one I would be focused on right now is that initial zigzag, as that has been the one that I've been kind of using to map out this entire correction ever since we started to ever since we invalidated this first impulse move, Luke. I'm saying Luke, my coach that I just coached with, Logan. This one right here, right? We initially did think that this was a 5-wave move, right? And then that got invalidated when we broke the high of wave 1. And we didn't talk about the rules much, but yeah, wave 4 cannot deviate below the high of wave 1, right? So the moment it broke this level right here.
Yeah.
What's up?
Wave 4 cannot end in the price territory of wave 1.
Right.
We've seen on Tesla where it does deviate inside, but then it does not end, and that's the only case where it happened on Bitcoin once as well. It's very unlikely, but it's possible. Where wave 4 comes in the moment. Wave 1. Yeah.
Yeah, the moment we started breaking down below here, it got invalidated and just went on to make a new low and provided the fact that it was in a further correction. So that's what I mean. Like wave counts can get invalidated, and primary counts don't always have to be there. So yeah. Yeah, pretty interesting stuff. So we really don't know, but the zigzag makes the most sense right now.
Yes.
That's what we're in. Yeah. Just because we did make a lower low and it's being led by an impulse wave, it's likely that we see an ABC then another one.
Yes.
Yep.
So Magnus Cycler asks, can you show how to apply the fibs to the wave count? I'm not sure if you joined a little late, but we did actually go over that in the call prior, and just because we're over about an hour and 10 minutes, I will reference you to the uploaded video of this to go back over that. How would this translate to TQQQ? It would be the same thing. You would be looking for the same wave counts on TQQQ, the same complete cycle, 5-wave move followed by 3-wave counter move. Austin can see if he can find a quick Elliott wave count for you on TQQQ.
Yeah, I mean, it's the same thing, essentially. I would say TQQ and just the NASDAQ in general is just way more volatile and, much more impulsive. I think it's a very clear 5-3-5 here. And it never invalidated for the Qs. So I would definitely, depending on how you look at it, right? This would be our first 5-wave move to the downside. And this is very, very macro. Keep that in mind. So you'd have to zoom in and count the other waves, right? Our ABC took place here. Roughly drawn. And now we're taking part in another impulse wave to the downside. And this is questionable because it's like, this could have a correction following off of it, right? You could see something like this. One more leg down. But yeah, it's essentially in the same spot as SPY, just way more aggressive to the downside. So we could find some price targets though if we go here. The Qs are already kind of running into them.
Could you take the price target from the bottom? Yeah, there you go. I like that. I actually would move that down a little bit. The one that you just drew.
Yeah.
Yeah.
Right here.
Yeah.
Because that's questionable. I agree. But yeah, so this general range should serve as some kind of reversal level for the Qs. So it wouldn't surprise me to see the pop soon. Again, does that align with the SPY analysis we just had? Yes, we're expecting a corrective wave to the upside. We said that SPY should go to the upper 430s probably in the short term, right? So we should see a reversal, and then what we do from there, we'll see. But I'm short-term bullish, right, Logan? I mean, I think you agree with me.
Yeah. Unless something spectacular happens Monday where we just take out new lows.
CPI data could be the stick in that.
CPI data does come out Wednesday. We'll have to see what that presents. But yeah, if things don't invalidate too quickly, things do seem to be bullish this upcoming week. Cool. Well, any other last-minute questions, my friends? CPI data, that's Consumer Price Index, essentially the cost of goods for consumers and the increase month over month, so inflation for consumer goods. If we got time, can we see in Unity, please? Because it went below its IPO price this week.
Unfortunately, guys, we're not here to do, just TA on that stuff. That's what the live calls during the week are for. Here, we just want to keep the subject kind of on the broader picture of, Elliott wave framework and Fibonacci extensions or retracements.
Yes.
So if anybody has any questions regarding those things, we'd be more than happy to answer them for you. But otherwise, that's pretty much all we got. We got for you.
And, I just wanted to quickly say, everybody was saying earlier that it was a lot of information. It definitely was a lot of information. Austin and I just tried to summarize a 300-page book, or at least a majority of a 300-page book, in an hour and 10 minutes. That's, very, very difficult to do. So we spoke fast. We went over a lot of different things. And if you didn't grasp everything, I highly recommend asking us questions throughout the day, because everybody in here is OBR Premium. Or, going back and reading the book. Magnus Eichler just asked. The name of the book is The Elliott Wave Principle, The Key to Market Behavior by Robert Precher and AJ Frost. You can find it for free online if you type in free PDF after the name. I'll actually type it in chat. But also, I recommend you go back and watch this recording. That will be up after this weekend.
Sounds like we need to find indicators that are showing a bullish reversal, like a higher time frame RSI divergence. Yeah, I mean, I wouldn't consider RSI divergence super reliable.
No, definitely not.
But it's something to consider. I'm not sure what time frame you're looking at, but I can take a view at the RSI for you.
I think Clayton's a blind bull. I don't know if there's anything pointing in his direction.
I see it. I guess it. Well. Yeah. I don't know. I do expect a bounce in the short term, but macro-wise, I'm not sure if we're ready for all-time highs. We will see, though. We will see. What was that?
What's macro?
Macro, the larger picture, right? So it's the opposite of micro. You with a microscope, how you zoom in on stuff very closely, right? That's very close. And then the opposite of micro is macro. So like when you learn, when you go to school, right? If you go to school for economics, you'll learn about micro and macroeconomics. Microeconomics is more focused on like your town, your city, what's going on where you are, whereas macroeconomics is really focused on the bigger picture. What is the global economy doing? What is our country's economy doing, right? So that's just a good way to think about the difference between micro and macro.
Thank you.
Yeah.
Yeah, if we say
Large
macro
and
when we're
small.
talking about, yeah, exactly. If we're saying when we're on charts, we most likely, if we're saying macro, we most of the time mean higher time frame, micro being lower time frame. To make it very simple.
Yep. Yep. If you know the difference between micro and macro, you're one step ahead of everybody in your economics class. So, good job.
Vedant, if you want to send us your chart in stock chat when you're done, we will most gladly look it over for you.
Yes. Maybe not tonight though. The UFC fights are tonight.
Maybe not tonight.
So
tomorrow or Monday
tonight
for sure.
Tonight, Elliott will be out for the count.
Cool.
Who you got tonight?
Yeah, that's a good question. So I do still have Charles Oliveira, and then I have Rose, and then I have Tony Ferguson. Probably, I don't know how into it you guys are. If you're just probably watching the Gaethje Oliveira fight, but I watch I know them. They're already fighting right now, actually. So yeah, the prelims. We need those picks. Yeah, I got to get them out here. So I'll try to do that. I don't know. I'm taking some risky picks. Risky. All right, guys. Yeah. So anybody else have any other questions? Otherwise, we will wrap her on up.
Thank you, gentlemen, for your time.
Yes, sir. Thank you. Yes, we appreciate your time as well. Right. Without you guys, it would just be me and Logan talking in an empty room. So
yes,
that's only fun for so long.
You guys are fucking brilliant. That's it.
Yeah, as always,
Alrighty,
guys, we greatly appreciate your time and attention on this beautiful Saturday evening. We wish you guys a great rest of your weekend for sure, and we will catch you Monday morning.